Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SYNDAX Pharmaceuticals INC quarterly report. SYNDAX Pharmaceuticals offers a range of therapies for cancer treatment. The company's lead products include revumenib menin inhibitor for relapsed or refractory acute leukemia, axatilimab CSFR, colony-stimulating factor-1 receptor blocking antibody, for chronic graft-versus-host disease and idiopathic pulmonary fibrosis, and tinostat, class 1 HDAC inhibitor, for various cancer types, licensed to Eddingpharm International Company Limited. Additionally, the company is developing revumenib for relapsed or refractory acute myeloid leukemia with a nucleophosmin 1 mutation combination therapy in MNP-MON, AML, or KMT2A acute leukemia, metastatic colorectal cancer. SYNDAX Pharmaceuticals Inc. stock price has dropped by over 22% in the past year due to several key events. The company's phase II trial results for its drug revumenib were met with disappointment, despite achieving its primary endpoint, causing a 25.6% drop in stock value. Additionally, the company's Cone 2025 earnings report showed significant losses, and its Q3 revenue miss fell short of analyst expectations. These events, combined with ongoing financial strain and net losses, have contributed to the decline in stock price. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. On the revenue growth side, several key factors contributed to the increase in revenue. These include the introduction of new products such as Revuforj, which generated $32,007 in 2025, collaboration revenue from Incyte, totaling $13.9 million and $23 million for the 3 and 9 months ended September 30, 2025. Commercialization milestones from Incyte, worth up to $230 million. Royalties on net sales of Niktimvo in Europe and Japan, amounting to a mid-teens percentage. On the revenue decline side, there is limited information provided. However, it appears that a decline in milestones and license revenue contributed to the decrease in revenue. Specifically, a decrease in milestones and license revenue of $12,500 for the 3 months ended September 30, 2025. A decrease in milestones and license revenue of $16,000 for the 9 months ended September 30, 2025. Overall, the introduction of new products and collaboration revenue from Incyte were key drivers of revenue growth, while a decline in milestones and license revenue contributed to revenue decline. The company's financial summary reveals some fluctuations in its liabilities, but no significant changes in debt levels or interest expenses. The current portion of royalty interest financing liability increased by $10,809, while the non-current portion decreased by $10,580. Total long-term liabilities also saw a decrease of $10,968. However, interest expenses for 2025 are reported to be $24.2 million for the 9 months ended September 30, but no explicit comparison is made with previous years. Overall, the data suggests that while there have been some minor changes in liabilities, debt levels and interest expenses remain relatively stable. Management's outlook and strategy overview. Management is optimistic about the company's future prospects, expecting to replicate successful results in upcoming clinical trials. They anticipate regulatory approvals and market adoption for their product candidates. The company plans to commercialize its products through collaborations, such as the Incyte license, which will support future cash needs. To achieve this, management expects to continue supporting the business through equity offerings, debt financings, and additional funding from license and collaboration arrangements. They also plan to advance the development of their product candidates, with external spending expected to grow while internal spending grows at a slower pace. However, the company faces significant competition from other therapies in relevant indications. Management believes that their ability to compete will depend on various factors such as market adoption, efficacy and safety profile, time to approval, commercialization, price, reimbursement, manufacturing, and formulary status. The company has made significant changes to its business structure through acquisitions and divestitures. In terms of acquisitions, the company has purchased wholly owned subsidiaries in the United Kingdom, the Netherlands, and a second U.S. subsidiary. On the other hand, the company has also undergone divestitures, dissolving its wholly owned subsidiaries in the United Kingdom and the U.S. These transactions have likely impacted the company's operations and financials, but the exact details are not specified. Concerns about inventory buildup and supply chain disruption. The financial summary highlights two key issues affecting the company's operations. Firstly, there are concerns about inventory buildup, which has been evident in various metrics. The inventory increased significantly from $366 to $25,000 between December 31, 2024, and September 30, 2025. Additionally, prepaid inventory also saw a substantial increase from $2,009 to $2,505,000. These indicators suggest that the company may be experiencing issues with managing its inventory levels. On the other hand, there are no significant concerns about supply chain disruption. The financial summary does not mention any disruptions or issues related to the supply chain, indicating that this aspect of the company's operations is relatively stable. That concludes the financial summary for SYNDAX Pharmaceuticals Inc. Feel free to comment below, and I will be happy to answer them when possible.